In your market news, Asian trade shares were pinned below 1.5-month highs on Tuesday as even larger than expected interest rate cut in China failed to excite investors jaded at the lack of bigger stimulus measures. China's 5-year loan prime rate was lowered by 25 basis points to 3.95%, bigger than the 5 basis points to 15 basis points cut that was forecast by economists. The Shanghai Composite, however, fell 0.7% in early trade and blue chips fell 0.6%. Local markets, the rand slipped as traders refrained from making big bets ahead of domestic inflation figures and the finance minister's budget speech tomorrow. The rand is currently trading at 19 rands 3 cents to the dollar, 23 rand 95 to the pound, and 20 rand 51 to the euro. Gold is trading at $2,021 and platinum at $898 per ounce, and the price of Brent crude oil is at $83.60 a barrel. For more, I'm joined on the market commentation by Martin Smith from Anchor Capital Market. Martin, thank you so much for your time. Firstly, let's zone in on the unemployment figures. What was your consensus and what do you read about these fourth quarter unemployment figures of 32.1%?
So I think if you look at some of the leading indicators, was to be expected somewhat. I don't think the market's massively surprised by these numbers. And if you look at anecdotally, South Africa needs around 3% GDP growth for job creation to really start coming through. And as you know, we're in quite a tough backdrop at the moment. There's a lot of headwinds and economic growth is quite tough to come by. So on the back of that, it kind of makes sense to be seeing these numbers. And I think we need some real growth to come through before we start to close the gap a little bit. And I think the big structural issues we currently face outlined by, I think, the youth unemployment number, which is sitting at about 60%. So that I think is quite a big indicator of where we are at the moment. But hopefully things start to improve and we can start to close that gap a little bit. The one thing I will say on these numbers, though, is that they are based on household surveys. Yeah. So some economists might say that it's not a true reflection of exactly what's going on in the job creation or job employment numbers in South Africa. But that being said, it's still not looking particularly promising at this stage.
Yeah. Normally, the market is not something that would pay attention a lot to these kind of numbers, but the rand breaching 19 rand to the dollar, is there something to read, or could it just be dollar strengthening?
I think we're more caught up in global factors and global forces. As you're very well aware, you've had an incredibly strong US dollar for the last better part of 2 odd years or so. And that's a function of where we are from an interest rate perspective globally. Risk appetite is not very high at the moment, so you're seeing a flood towards things like the dollar. So I think the rand's just caught up in a little bit of, again, global forces and the like. But as data starts to come through over the next 6 to 12 months, hopefully there's some positive news. We see some weaker dollar action come through, maybe some sentiment changing towards emerging markets like South Africa, and then you could see some strengthening in the rand. But for now, we remain pretty much at the mercy of what global markets are doing and where risk appetite is at the moment.
Yeah, one thing that the market will not put a cast an eye out on or will not ignore is definitely the budget speech tomorrow. They will be looking to see what kind of measures and austerity measures, if any, South Africa is going to be putting across in terms of making sure that they grow the economy. Do you anticipate that it is a kind of budget that will appease the market and maybe even things like the rating agencies?
No, you're 100% right. It's very important at the moment, given kind of, again, the tough economic background that we find ourselves in South Africa at the moment. Like I mentioned with around the unemployment numbers and the like. So we're in a tricky position at the moment. Yeah. Lots of headwinds. I think the market's probably not expecting too much in so far as new policies, and I think growth will probably be maintained at about 1% as per the previous forecasts for GDP growth in 2024. But I think the big things the market's looking for is fiscal consolidation. Are we going to continue on that path? How funds are going to be spent? Is it going to be allocated efficiently? And like you mentioned there as well in your question, how are we looking to make growth happen in South Africa? How are we trying to find ways to kind of get more growth in the country? And I think those are the big things that the market's going to focus on. And let's see, we'll find out tomorrow, right?
Yeah. And let's talk about inflation. We're also expecting CPI figures from SABC tomorrow. The last reading was 5.1 of December, and consensus now for January is hovering around 5.3, 5.4. I expect that inflation will still remain sticky, but do you think this dashes our hopes for a rate cut anytime soon, or should we be looking for much later in the year if we have any hopes of a rate cut at all?
Sure. So I'm in agreement with you. 5.4 is what we have, and that's very much a function of higher fuel prices coming through as well as a weaker rand. So we expect that. We think inflation should moderate and slowly come down throughout the course of the year. Okay. We are within the SABC's mandate of 3 to 6, but I know they like to get close to 3%. With regards to inflation and affecting interest rates, we think probably second half of the year you'll see about a 1% interest rate cut. Again, inflation, like you mentioned, is still quite sticky, and we are also kind of beholden to what happens in global markets and their interest rates as well. We don't want to be cutting too quickly ahead of what's happening in global markets. Obviously, then it has kicked through onto the rand, which then again, in fact, impacts inflation. So a lot of moving parts, but I think you'll see inflation slowly start to come down throughout the year and about 1% cuts in the second half of the year.
All right. I'm looking forward to see Anchor Capital's analysis for tomorrow, particularly with inflation and as well as the budget. I've been speaking to Martin Smith from Anchor Capital on a range of issues here during the markets. Thank you so much, Martin. All right, after the break, we'll take a look at expectations ahead of this much-awaited budget speech tomorrow. Don't go away.